Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday the 3rd of April 2021 and we're publishing our gold and silver weekly update for the weekend in the 2nd of April. That said, technically the bullion market was closed for Good Friday in the United Kingdom. We also briefly look at political events and economic reports, which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. Gold fell $3 last week from $1,733 to $1,730, having hit a high of $1,737 and a low of $1,678, a fall of 0.1%, with lower lows and lower highs compared with the previous week. In sterling terms, gold finished the week at £1,251. That's down just £6, or 0.4%. And in euros, it closed at €1,471. That's actually up €2, or 0.2%, thereby showing, of course, the weakness of the euro against both sterling and against the US dollar. Silver fell just 9 cents from $25.08 to $24.99, having hit a high of $25.13 and a low of $23.80, a fall of 0.4%, with a lower high but much lower low compared with the previous week. In sterling terms, silver closed at £18.09. That's down 19 pence. And in euros, it closed at 21.25 euros. That's down 0.02 euros. The gold to silver ratio rose from 69 to 1 to 69.2 to 1. Bitcoin rose almost $5,800 last week, and its price is currently $59,156. The Dow Jones closed on Friday at 33,153, up 171 points on the day and up 81 points on the week. The S&P 500 closed at 4,019, up 46 points on the day and up 72 points on the week. And the Nasdaq Composite closed at 13,480, up 233 points on the day and up 342 points on the week. Moving to oils, Brent crude closed at $64.86, up just 29 cents, and WTI crude closed at $61.45, and that's up just 48 cents on the week. Perhaps more noticeable is that the dollar index stands at 93.02, and that's up 0.26 on the week. So we're seeing, for the moment at least, continuing rises in the dollar index. Now, our price trading range last week stated, quote, "Our usual targets for gold and silver are being lowered just slightly for silver, with gold trading between 1650 and 1800, with 1600 and 1850 as outliers, and silver trading between 2450 and 2650, with 2350 and 2750 as outliers." Unquote. Well, gold traded certainly comfortably within that range, while silver, eventually having done so as well, did look for a brief moment as it would test our outlier low, but it did manage to recover from that. Now, gold opened down last Monday and fell almost continuously until around 0400 hours GMT, reaching a low of $1,678, and then continuously rising really, until its close, ending up almost the same as the previous week's close. Now, we shall look into the reasons why this happened in a moment. What is interesting, though, is that the difference between the week's high and the week's low was just shy of $60, or just over 3%. Nothing particularly to get too excited about, if truth be told. Now, that said, the economic data produced on Friday, which we shall look at also shortly, the gold market has not had the opportunity to react to it because of Good Friday in the United Kingdom and Monday being Easter Monday. We will expect to see some reaction certainly on Tuesday. Now, technically, analysts are undecided as to whether we're going to see gold fall below the 200-day EMA and perhaps touch as low as $1,500 eventually, or break above the highs experienced in the past few weeks and actually breach that $1,800 level. The 1,700 level is showing support, with a short-term double bottom having been achieved, which could indeed be a bullish sign, certainly technically speaking. However, this may indeed be counteracted by a strengthening dollar, as we pointed out last week, and also actually is what occurred, and continuing rising bond yields, both of which are negative for gold. We can expect to see resistance at 1750 with further resistance at 1800. And as mentioned, support at 1700 and multiple stages beneath leading all the way down to 1500. Silver's pattern last week was almost identical to gold. Troughs until early Wednesday morning and then a continuing recovery of prices, closing only marginally down for the week. The spread, though, between its high of 25.13 and its low of 23.80, being some $1.33 or 5.3%, was proportionately greater than gold's. Again, as with gold, we have the potential of a move higher above resistance levels, which could see silver stretch to $26. And if it manages to exceed this, it could find its way rapidly moving closer towards a $28 target. Now, on Friday, we saw the non-farm payrolls come in at 916,000 new jobs for March, compared with a paltry 468,000 in February. This is almost, not quite, but almost 250,000 jobs higher than the mean average, and has proven to be a most encouraging piece of economic data. With UK markets closed, gold and silver not really had an opportunity to respond. It's envisaged that potentially they could be adversely affected in that additional stimulus may now not be needed on the one hand, but on the other, the industrial demand for silver is likely to rise, thereby assisting the silver price moving forward. We also saw a positive ADP employment report on Wednesday and improved market and ISM manufacturing PMIs published on Thursday. This, coupled with Tuesday's consumer confidence index for March coming in at 109.7, compared with 90.4 in February, all of this now suggests a recovering economy. Having said that, of course, it's also been announced that a number of countries over this Easter break have started to increase their lockdowns due to the third wave of coronavirus. So we're not out of the woods yet. Now, taking a look at what we're expecting this coming week, on Monday, we have the Market Services PMI for March and the ISM Services Index for March and factory orders for February. On Tuesday, job openings for February. Wednesday, trade deficit for February, consumer credit for February, and the FOMC minutes, which will be closely watched by analysts, no doubt. Thursday, weekly jobless claims report, as always, and on Friday, the producer price index for March and wholesale inventories for February. So Monday and Wednesday, the 2 days particularly to watch out for. The big political news, if we can call it that, is of course Biden's planned $2 trillion infrastructure spend. And we shall cover this in a separate video later in the month. But if you couple this with the $1.9 trillion stimulus package already announced and beginning now to be put into operation, this certainly suggests that the United States are on the road to MMT economics, that's modern monetary theory economics, buying its way out of recession for sure. So where does this leave us for gold and silver prices next week? Well, as this past week, the price of gold and silver will continue to be determined by yields and dollar strength or weakness. An improving economy should for sure ensure major support for silver as the monetary demand for it diminishes. It's now a question which comes first, the lowering of price due to reduced monetary demand or the increasing of price due to increased industrial demand for silver. Our usual targets for gold and silver are being more or less maintained, though we are widening them just ever so slightly, certainly for silver, though we do expect quite a move on Tuesday, as UK markets reopen again, particularly. Our gold trading range, therefore, is between $1,650 and $1,800, with $1,600 and $1,850 as outliers. And silver trading generally again between $2,450 and $2,650, with $23 to $27.50, so we've widened that slightly, as outliers. Now tomorrow we shall be publishing episode 16 of Bitcoin versus Gold and Silver, as we have failed to produce one in the series these past 2 weeks, though having said that, the amount of news available hasn't really to some extent warranted such a publication. What do you think is going to happen to gold and silver? How do you think it's going to play out in terms of this increased public spending? And how long will that take to filter through to an improving economy? And do you think that what has been happening in Europe in particularly and other parts of the world where some new close downs are beginning yet again, whether that will have that impact on global economic growth and demand? Share your thoughts, please. Also, if you haven't done so, subscribe to our channel. And finally, we will be having another Richard and Greg interview to be published tomorrow. Meanwhile, have a safe, enjoyable weekend and a prosperous week ahead. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.